If you've ever tried to borrow money, you'll understand how important a credit file is. It can mean the difference between getting declined for a loan versus getting the lowest possible rates they are available. Many people don't understand how to get credit scoring to work for them. And this is not the kind of stuff they teach you in school. If you're watching my content for the first time, my name is Hussain, and on this channel I share with you my 15 years of property investing experience to ultimately help you get further faster in your property investing journey. When it comes to credit files, there's really two main companies in the UK that mostly hold the credit data. There's also a couple of smaller ones as well. But what is it that they actually do? Well, essentially they keep a record of your borrowings. So when you're borrowing money and you're repaying it, they've got a record. Now this is not just credit cards and loans. It can be overdrafts, it can be utility bills, it can be telephone bills, it can be a number of different things. If it's some form of credit, effectively they'll keep a record, and then they have an internal scoring system. So what are the main agencies? Well, the biggest agency and the one that most people tend to use is Experian. That's the main agency a lot of lenders will tend to use in credit card companies and banks as well when it comes to borrowing money. Then Equifax is the other main one. So if you're collecting data and you're looking at your data, these are the very minimum the two that you need to look at. There's a couple of smaller ones as well. There's TransUnion, previously called Core Credit, and also a smaller new kid on the block called Crediva, which really not many people are using right now. When you're borrowing money from the various different lenders, each month those lenders are reporting that data to the various credit reference agencies. Those credit reference agencies are then keeping a permanent record in terms of what's happening with your activity, i.e. how much you're borrowing, how much you're repaying, whether you're repaying on time, whether you've had any late payments, or whether they're about to send the bailiffs round because you've not been paying your bills. So these records are then kept, and these are then shared with future lenders that you might go to. The agencies all have an internal scoring system. Now this scoring system will vary from agency to agency. It's not exactly the same. So for example, the score you get from one agency is not necessarily a direct comparison of another one because they have their own internal methods in terms of how they arrive at these numbers. Essentially, your monthly data that's sent across to the agencies is used by other lenders to assess whether they want to lend money to you. We've talked about what credit scoring is, but why is it so important? Why is your credit file such a critical thing? Even if you're not going to borrow money, it's important. Well, if you're going to rent a property, they'll do a credit check on you. If you want to open a bank account, they'll do a credit check on you. If you want car insurance, they'll do a credit check on you. So even if you're not borrowing money, your credit file is such a key part of your money life. Now, this is why it's important to be able to keep it in tip-top condition, but also when it does come to borrowing money, because at different stages in our lives, sometimes we might need to do that, whether it's a credit card, it's a loan, it's an overdraft, it's a mortgage, the credit file is going to be absolutely key. Essentially what lenders are doing, they're assessing your credit worthiness. How worthy are you of credit? And the only information they have is what those files will hold. And this is why it's important you understand what's in them and how you can make them work in your favor. Because when it comes to borrowing money, if you've got a brilliant credit score, ultimately it means you'll get the lowest possible rates. Whereas on the other hand, if you've got a poor credit score or a poor credit record, what it means is you may still be able to borrow money, but you'll probably get the most undesirable rates in the marketplace. You might be thinking right now, when's the best time I need to look at my credit file and get all this stuff in order so I can get these best possible rates? Well, the best time is before you need the credit. And what I mean by that is not 5 minutes before you need the credit, but several months in advance, because the way the system works, you want to be able to manipulate it in a nice kind of way to your advantage so that you can be able to present yourself in the best possible light. Now, often our credit file will start when we start opening those first bank accounts, maybe when we leave school, and as essentially we become an adult, that credit file exists. Now, I remember many years ago, I went with a friend who was looking for a mortgage to see a mortgage broker, and my friend at the time was saying, hey, look, I know I've got a great credit score, I've never borrowed any money, don't have any debt, so I'm going to have a good, clean credit record. But that's what his understanding was. Well, the mortgage broker told us, well, actually, if you've got nothing in your credit file, it doesn't necessarily mean you high score credit file. The reason for that is because there's no activity there for lenders to be able to see what your ability is to be able to manage money. And that's essentially what the credit file is doing. It's demonstrating to lenders that you're good at borrowing money and repaying it on time, that you're a good bet to be able to lend some money to. Your credit score will actually fluctuate over time. Sometimes it might be higher, sometimes it might be a little bit lower, but you need to manage that to keep it as high as you can, particularly when you might need to borrow some money. So when it's referenced and when it's checked that it's in the best possible state. Sometimes people, particularly when they're younger, they abuse their credit file. They don't really understand the importance of it. They get their first credit card, £200, and straight away they're buying those £200 trainers, and then they start paying a tenner a month, and then they start missing some payments, and then before you know it, they've built up this debt. They're barely 19 years old, and already they've made a mess of their credit file. And your credit file stays with you for your whole life. Now, it doesn't mean that you now have a black mark permanently, because we'll talk more about that in a moment. However, by understanding your credit file, you can start managing it and looking after it early and really guarding it, because it's such an important part of your money life. If you're enjoying this content, then make sure you hit that like button, subscribe to the channel, and enable the notification bell. That way you'll get notified by YouTube when we're releasing these great videos and you're not missing out on any of this content. Let's now look at how it is that you can build and improve that credit file. So I want to give you this in the way of 5 tips. 5 top tips that are really going to help you. If you follow these through, I can promise you it's going to make a big difference to your credit file, regardless of the state of it right now. The first one, tip number 1, is to be able to access those files and have a look at what's on them, because often people don't even look at their files, they don't know where to get them from, they don't even know what's on them. And the only time they even discover there's a problem is when they've tried to go and get a mobile phone contract, or they've tried to get an overdraft and they get declined, and they wonder, hey, why have I got declined? What's the issue? Sometimes people think, well, I'm not aware of any problem. Why is it that I'm getting declined? And if you ever do get a decline letter from a lender, often they'll just cite at the bottom of the letter or the email that you should go and check your credit file. They don't really actually give you anything meaningful. This is why it's important that you're checking your file. As I mentioned earlier, there's several agencies, but at the minimum, it's the 2 key ones, Experian and Equifax, that you need to be looking at to see what's on those. Now, there's many different ways to get these. Often these companies and the websites, they'll offer you packages where you can pay on a monthly basis to be able to get this information. The reality is you don't really need that, but you know, it can be quite useful to do that. But many of them will also give you a free trial for a month or so. That means that you can get a little taste for what it is, getting access to that information. And remember, if you don't want to go down the paid route, you can also get access to your data under Data Protection Act as well, because this information is yours that they're holding, that you can ask for as well. But often you'll get it in a non-meaningful way that you can understand it. So using the subscription service, even if you cancel it after a month, is probably the easiest way to access the information in a meaningful way that you can interpret it and see what it means. Once you've got access to those files, what is it that you're looking for? Well, there's a few key bits of information that you want to check. Firstly, you want to make sure your name is on there correctly. And it seems like a weird thing to say. Of course my name is going to be correct. But there is often times where there's a spelling mistake in terms of how your name is written, or a middle name might be missing, for example, and it's not quite complete. So this can also cause problems with credit files when your basic details aren't right. So your name, your address, date of birth, all these things hopefully are all correct. Now, other things that you want to look at is your previous address history, where you've lived previously, especially over the last 6 years. So why is 6 years so important? The reason 6 years is important is sometimes you may have heard that after 6 years things drop off your credit file. Well, actually, as I mentioned earlier, those records are there. They're there for a very long time. If you look at your files, you might have records going back 10, 12, 15 years sometimes even, because that's when you open certain accounts. However, when credit checks are performed, they only look at the last 6 years. That's why things beyond 6 years tend to be less important. So you want to look at the addresses of the last 6 years, where you've been staying, and of course, whether you're on the electoral roll. And the reason this is important, firstly, it's a legal requirement. And what lenders do is use that as a way of being able to check whether somebody's actually at an address when you make an application of any sort of credit. So this is why your electoral roll is important. You may not want to vote. That's perfectly okay. But you still need to register and be on the electoral roll. So you want to check that you're registered correctly at these different addresses. You're on the electoral roll as well. If you weren't on or you're not on, then make sure you get on. It's very easy to do. It's free. You just look at the local council website. They'll be able to help you get on and make sure you're registered. You should also look at your file and check all the accounts are on there to make sure that they're correct and they're your accounts, that they're not inactive ones that you've forgotten about and they're still running. For example, you opened a bank account 8 years ago that you've never used, and it's at an address that you moved 2 addresses ago, it's still valid. So you want to go through that and check that all this information is correct. So your accounts that you've got, any credit checks that you've done that are on there, so you can see what kind of checks are being carried out on your account. The bank accounts and loans, credit, whatever you've got is all on there, it's correct, and your other personal details are correct as well. So this is just a basic checking of the file, and often if you just get this bit right, it can make a big difference, because there'll be people that will get declined for credit because there's simple mistakes like their address, date of birth, mistakes in the spelling of their name on credit files as well. Tip number 2 is to identify any negative impacts that may be on your credit file. What do I mean by negative impacts? These will be looking for things where you may have had a late payment, a missed payment, maybe even a county court judgment, a default. Any of these things will have a negative impact on your credit score. You want to look for these, and often it's easy to miss a payment on a credit card bill or pay a phone bill late, but these things do impact your credit score. It will reduce your credit score because it demonstrates, or as far as the lender's concerned, in their mind, it demonstrates your lack of ability to be able to manage money, to be able to pay things on time that you're supposed to. So you want to look for these and see, are there any that were genuine mistakes that you might be able to rectify and fix? So for example, let's say you paid your phone bill late that month, 1 month, but you did pay it within the month, then it's worth getting in touch with the company and see if they will correct this for you by asking them to correct it. And sometimes they will and other times they won't. You can also try to go through the credit reference agency directly themselves and see if they will help. Now, if you've got an issue with something that's not been resolved, you can always go to the financial ombudsman and see if you can seek some help from them as well. But anything negative on your file is not ideal, so you want to look to see what you can do to get those removed. Now, sometimes it could be a genuine mistake, that's something that's difficult to rectify, or the lender's not being very helpful in removing that, and you can ask for what's called a notice of correction. And what that means is usually a written note on your file to explain something, and you can provide that text up to a certain amount of characters. But what this then means is when you're applying for any kind of credit, let's say you're applying for a credit card online, often the computer won't give you an automated answer because it'll see this notice of correction and it'll identify that somebody actually needs to look at this and look at it from a person rather than just a computer saying no. But the advantage is at least you've now got a chance of somebody looking at it rather than it automatically getting declined. Tip number 3 is not to make too many applications at the same time. So what do I mean by that? Well, let's say you apply for a credit card and it gets approved, and a week later you apply for another one, it might get approved, might get declined. Well, let's say you get declined in one place and you go straight away and apply for another one somewhere else within a week or two or within a month. What actually happens is each time you make an application for credit, it has a knock-on effect on your credit score, i.e. it knocks it down a peg to show that you've applied for some kind of credit. Now, as I said, the internal scoring system, that's how it works. So if you're making applications for credit, what's happening is each time it's being knocked back. But of course, there'll be other things going on in your credit file, such as you repaying other borrowing on a regular basis, which keeps it kind of moving up, which is why it fluctuates. It's never the same. And remember, what the credit reference agencies hold is a monthly snapshot, not a live access to your data. So for example, if you paid something, it doesn't show up on your credit file straight away. It will show up on the monthly cycle whenever that is. And the cycles will vary from lender to lender and also from agency to agency as well in terms of when they refresh those reports and provide that data to you. As I mentioned earlier on, if you want to borrow money, you really should be planning way in advance, and that way you can get your credit file in tip-top order. Often people make the mistake, they're making multiple applications, and this has that negative impact on your file because every time you're applying for credit, it's having a negative notch on the file to bring it down. But what you'll also be doing, you'll be repaying other payments that you maybe have, such as credit cards or other loans, and that will bring the score back up again as well. So ultimately, your credit file fluctuates, it's never set in stone. But the reporting of this is done on a monthly cycle, and the monthly cycle will vary between the different lenders and also the different agencies as well. They're not all the same. So the information that they get to see at one moment in time is a snapshot of what's going on at that specific moment in time in terms of what data has been reported for that month, for that cycle. So if you're applying for more than one credit card, if you do them in a linear fashion, you do one month or one the other month, they definitely will have a negative impact. A quick hack for you is, one thing you can do is you apply for 2 credit cards simultaneously or 2 forms of credit simultaneously, because by the time they show up on your credit file, it'll be the following month rather than immediately. Yes, you'll have a hit on your credit file the following month, but at least you'll get the 2 applications at the same time because it won't necessarily get seen or they won't necessarily be on your file. Tip number 4 is not to utilize all the credit that you have available to you. That might sound a little weird. Why not use all the credit that they're giving me, right? They're giving me access to this money. I should just use it and I just spend it, right? No, you don't want to do that. And the reason you don't want to do that, because it can get new lenders concerned that you might be reaching the limits in terms of what you can afford. You're already stretching yourself too much. The best way to be able to do this is to keep to what's called a utilization of say 25% of revolving credit. So what is revolving credit? Revolving credit is credit that's available to you and it's there each month, it just moves forward, like a credit card, for example. This is different to a loan because a loan is not revolving credit. They give you the money in advance when you ask for the loan and then each month you're just paying it down. However, a credit card or an overdraft, this is revolving because it's available to you every month. If you're only utilizing 25% of how much is available to you, let's say you've got, say, 4 credit cards, you've got £1,000 on each one, and if you're only spending a total of £1,000 on those credit cards, that shows you've got 75%, i.e. £3,000 of credit that you're not using. Then in the future, if you need to apply for more credit, you need something, it's much easier to get it because the lenders are more comfortable. They can see you've got access to this other credit. It's unlikely you'll miss payments, and it's unlikely you'll fall in a situation where you'll not be able to maintain your payments. And this is the way they tend to look at it. Pretty sad and unfortunate, the best time to get credit is when you least need it. It sounds crazy, but if you're needing a credit and you've maxed out your credit cards and you're looking to borrow more money, the lenders will always be nervous of lending you more money. If on the other hand, you've got only, say, a low utilization of, we're talking about, of your available credit, and you're asking for more, it's much easier to get it. So this is why it's really important to be planning ahead and making sure you're not using up the limit in terms of what's available to you. One of the easiest ways to make sure you can manage your credit score and keep pushing you up is to use some of the credit that's available to you. Sometimes people keep cards for a rainy day, they put it aside and they never access it. Well, that's not really helping you, although that's sitting on your file as available credit. But what you want to do is be spending some money on that and paying all of it off each month. So for example, if you've got a £1,000 credit card, spending, say, up to £250 each month and making sure you pay all of it off. So this may be like, for example, what you use your debit card for. So you're getting the groceries or you're getting fuel for the car, and this is because you've already got the funds in the account. Whereas actually, if you use your credit card to make those same purchases, then when your credit card bill arrives, you then transfer or use the money that's in your current account to pay it off. You're not really using credit, but you're utilizing the credit game to work in your advantage. Tip number 5 is understanding the impact a financial association has on your credit file. A financial association will be somebody that you have some kind of joint credit with. So for example, it could be a joint bank account with your spouse, it could be a mortgage with your wife, for example, or it may even have been a joint credit card that you had with an ex-partner. Either way, these are all financial associations that will sit on your credit file. And remember, this information is there for a very long time. It's very easy to maybe end a relationship with somebody and you've moved on, they've moved on, but actually that credit association is still sitting on the file. So why is it so important? Well, the reason it's important is because if they have a negative impact on their credit file, for example, they get into a little bit of a financial mess, they start falling into arrears, what that will do, that will impact you because your file is linked, you are financially linked together. So it's really important to review your file, and if you've got any financial associations there that you shouldn't have, then it's important that you get them ended, you get them closed, because those accounts have to be closed and settled. So if you had a gas bill with an ex-partner you were with and that gas bill hasn't been settled, you can't close the account until it has been settled, regardless of who settles it, because it's a joint financial association. So when I talk about severing these associations, this does not mean go home to the missus and say, hey missus, we're now going to have to remove you off the mortgage because Saj said it's not a good idea to have a financial association. What I'm referring to is ex-partners and those accounts that are closed, that are no longer valid, that make sure you tidy those up. I'd love to know what's one thing you've got from this video. Pop it into the comment section below. And of course, if you've got any questions, also put them in the comment section below and I'll do my very best to answer those for you. If you'd like some more advanced tips on how to hack your credit score to be able to accelerate it quicker, then make sure you pop that in the comment section below. And if enough people ask, I'll do a separate video specifically on more advanced techniques. And if you've enjoyed this content, you are absolutely going to love this next video I've got lined up for you over here. But just before you go and click and watch that, make sure you click on my face just down here and here to subscribe to the channel. And I look forward to seeing you on the next video up here.